Hello, and welcome back to the channel. I'm Algabot, your guide to the world of automated trading on MetaTrader 5. Today we're taking a close look at an expert advisor called the Momentum Ignition Scalper. What makes this one interesting is that it's a pure price action strategy. It uses no traditional indicators at all. There are no moving averages, no relative strength index, and no average true range. Instead, it reads raw candles to spot a sudden burst of one-sided momentum, and then rides that thrust for a quick scalp. By the end of this video, you'll understand exactly how it enters, how it exits, and how to tune every single setting. Let's dive in. So what does this expert advisor actually do? At its heart, the Momentum Ignition Scalper is looking for one very specific moment in the market. It watches for a stretch of quiet, evenly sized candles, a kind of compressed, sleepy consolidation, and then it waits for one bar to suddenly fire off with conviction. That single bar is what we call the ignition candle. Its body is far larger than the recent average. It closes hard into its own extreme, and it breaks the high or the low of the little range that came before it. When all of those things line up at once, the strategy reads it as a burst of genuine, one-sided order flow, and it jumps in that same direction expecting the move to carry a few more pips before it fades. This is classic short time frame scalping behavior. The default playground for this strategy is a tight spread, fast-moving pair such as the euro-dollar on the 1-minute chart. The logic works because real range expansion off a compressed base tends to extend a little further before it mean reverts, and we only take the trade when conviction is obvious. Now, what kind of trader is this suited for? This is an educational tool for active, hands-on traders who are comfortable with fast time frames and frequent signals. Because it scalps, it can generate a lot of trades, and each one is small and quick. It is not a set-and-forget, long-term system, and nothing here is a promise of profit. Think of it as a clear, transparent example of how a momentum continuation idea can be expressed entirely in raw candles, with no indicator math whatsoever. Everything it does is derived from the open, high, low, and close of recent bars, which makes it a wonderful strategy to study and learn from. Let's walk through the exact logic, step by step. First, the strategy only acts once per newly closed bar. It waits for a candle to finish forming, and that completed candle becomes the ignition candidate. Before it does anything, it runs two quick safety checks. If there's already an open position from this strategy, it does nothing and lets the existing trade play out. And if the current spread is wider than the allowed maximum, it skips the trade because a wide spread ruins the economics of a scalp. Now the real work begins. The expert advisor measures the body of the just closed candle. That's the distance between its open and its close. Then it calculates the average body size over the previous bars, defined by the body average lookback setting. For this to count as a genuine ignition, the new body must be at least the burst body factor multiplied by that recent average. In plain English, the candle has to dwarf the bars around it. Next, the strategy looks at where the candle closed within its own range. For a long signal, the close must land in the top fraction of the bar, controlled by the close location setting. This demands real conviction rather than a candle with a fat rejection wick. Then it checks structure. The strategy detects the highest high of the prior lookback bars, and the ignition close must push above that level, a micro break of structure to the upside. When a bullish candle satisfies all three conditions, an oversized body, a strong close near its high, and a break above prior structure, the yay signals a long entry. It buys at the ask. The stop loss is placed just beyond the ignition bar's low, offset by a small fraction of that bar's own range. The take profit is then set at a fixed reward-to-risk multiple of that stop distance. The short side is a perfect mirror image. A bearish ignition candle that closes near its low and breaks below the prior structure low triggers a sell at the bid, with the stop just above the bar's high. Because the stop is built from the candle's own range, the risk scales automatically to any symbol or time frame. Let's bring this strategy to life on a chart. Notice the first four candles on the left. They're small, quiet, and evenly sized, drifting sideways just below the dashed resistance line. This is the compressed base the strategy loves to see. Then watch the fifth candle. It suddenly explodes higher with a body far larger than anything around it, and it closes right up near its own high. Crucially, that close pushes above the resistance line, breaking the high of the little consolidation. That's our ignition candle, and the strategy detects all three conditions at once, so the buy entry triggers. The stop loss tucks in just below the ignition bar's low, and the target sits a fixed reward-to-risk multiple above. Over the next two candles, momentum carries price higher, and it reaches the take-profit level. The long scalp is complete. Now watch what happens near the top. Price stalls and forms a fresh, quiet range, hugging the dashed support line. The candles are small and indecisive again, coiling up. Then the 12th candle fires off to the downside. It has a big bearish body. It closes hard near its own low, and that close breaks below the support line, snapping the structure of the small range. The strategy reads this as a burst of selling order flow and signals a sell entry. The stop loss is placed just above the ignition bar's high, and the target sits a reward multiple below. Price then slides lower across the final two candles and reaches the downside take profit. The short scalp is done. Notice that in both cases the pattern is identical, just mirrored. A sleepy base, a single oversized candle closing into its extreme, and a clean break of structure. Remember, this is a simplified illustration for educational purposes only. Let's go through every setting you can adjust. The body average look back, defaulting to 12, decides how many prior bars define the recent average body. A larger number gives a smoother, slower baseline, while a smaller one reacts faster to recent volatility. Next is the burst body factor, set to 1.8. This is the heart of the strategy. The ignition candle's body must be at least this multiple of the average. Raise it toward 3 or 4, and you'll get fewer but more dramatic signals. Lower it toward 1.2, and signals become far more frequent, but less selective. The breakout look back, defaulting to 6, sets how many bars form the consolidation whose high or low the ignition close must break. The close location fraction, at 0.3, controls how near the extreme the candle must close. A smaller value demands an even stronger, wick-free close, while a larger value is more forgiving. The stop buffer fraction, at 0.1, adds a small cushion beyond the ignition bar's opposite extreme, expressed as a fraction of that bar's range, so it adapts to any symbol. The reward ratio, set to 1.5, defines the take profit as a multiple of the stop distance. A higher ratio aims for bigger winners, but lowers your hit rate. The max spread points, at 20, is your scalping gate. If the spread is wider than this, the trade is skipped. Finally, lots sets your fixed position size, and the magic number simply tags these trades so the EA can manage its own positions without touching others. Always test changes on a demo account first. And that brings us to the end of our deep dive into the Momentum Ignition Scalper. We covered how it spots an oversized ignition candle bursting out of quiet consolidation, how it demands a strong close and a clean break of structure before entering, and how it manages risk with a structural stop and a fixed reward-to-risk target. We also walked through every parameter and how to test the strategy for yourself. Remember, everything in this video is for educational purposes only, and nothing here is financial advice. If you found this helpful, please hit the like button, subscribe for more MetaTrader 5 strategy breakdowns, and drop a comment telling me which expert advisor you'd like me to analyze next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.